Hello, I'm Greg Harrison with the USDA Market News Service here in St. Joe, Missouri with your National Feeder Cattle Summary this week. Calves pretty much dominated receipts this week, and prices for calves are pretty much kind of two-tiered. Prices for calves in the northern plains trading mostly $5 to $10 lower than calves in the southern plains, trading unevenly steady to $5 higher, and in the southeast regions a very unevenly steady market. Their calves there in the southern plains got a little value increase this week, a lot of that from the winter wheat grazing demand that we're having for these calves. Yearling cattle this week continue to sell at very lofty prices, and yearlings pretty much this week trading firm to $5 higher. A lot of good yearlings coming off grass, got some good weighing conditions, and they're selling with very good demand. There's just not a lot of them right now at this time. And looking at the calf market too, you see strings of long-time weaned fancy calves. They continue to sell with very good demand as well. Then there's the other side of the coin, and that's prices for the unweaned fleshy balling calves, where you see consignments of mixed quality and color, and many of these calves sell far behind the former, and for a good reason. It may seem unfair that there's such a disparaging difference in demand for these calves that don't appear to be that much different. But to the trained eye of an order buyer or a seasoned farmer feeder, there can be quite a difference in the quality of these calves. Right now we're seeing a lot of sick pens getting full in the southern plains and northern plains, which is pretty typical for this time of year, for October, for the feeder cattle markets to feel the pressure of these unweaned fleshy calves and the challenges it brings to get them straightened out. Pre-conditioned and vaccinated programs are very important, and calves weaned 45 days can be of great value and price to the producer and to the buyer. Corn prices this week caught some enthusiasm as we've seen corn harvest move at a slower pace than normal, 46% completed, and that's compared to the 5-year average of 65% completed. Farmers right now are harvesting soybeans ahead of corn, mostly due to the price relationship, and also as long as we got some good weather, let that corn dry down and for moisture content. But grain traders, if they return to strictly trading on corn, looking at the corn fundamentals, corn could see a downturn as there's sufficient amount of corn that we have on hand. And once farmer feeders get done harvesting corn, it looks like hopefully they'll get back in the market to buy cattle, calves, yearlings, with aggressive attitude, as they have a lot of corn in their grain bins, a lot of hay and silage to feed. So once they complete harvest, or as harvest gets closer to the end, we should see a lot of farmer feeders stepping back into the market. Big question this week is, can the fed cattle market continue at its record prices that we had last week at $170 on a live price, and is there any more upside potential to this market? And depending on inventory between now and Thanksgiving and the pairing off we're seeing between the packers right now, trying to cover their needs and cover inventory, we could see a push maybe higher on this market. As of we're doing this video, we're still waiting for trade to happen. The American consumer has a great variety of meats to choose from and is quick to notice when budgets are tight. But one thing, we're looking at gas prices at their lowest average price in nearly 4 years, and this should help consumer budgets for competing meats. But looking at the markets this week, the demand for yearlings is really good, and the feeder cattle market continues to be very good also as well. And so this is all I have for you this week. We'll look at the markets next week, and hopefully you'll have a good week, and be back next week with more markets. You can catch more markets at this website. Thanks for listening.